Hello there everyone, this is Stephen from ForexTradingSchools.com. Now today I'm just going to run through a quick video just explaining and having a look at our trading strategy that we like to use. So the basis for our strategy is similar to stop hunting, which you may have heard of. What we look for is areas where people have orders, stop losses sitting there, because basically a stop loss will be the opposite to whatever the order has been placed. So if someone's gone long, their stop loss will be a short order. So we're having a look at a chart here. Now the colors I've got on the chart, the blue color here is the New York session, the purple color is the Asian session. I just put those on my charts because they're the areas I'm looking at for high volatility within the trading times. It helps to separate the different sessions. Obviously the area that doesn't have anything is pretty much the cross between it's the Euro session that crosses from the Asian session into the New York session. Okay, so let's have a look here. So what we've got here is, like I said, we've got the New York session and the Asian session. So we can see price came up into the New York session, reversed there, came down, kind of looks like it's jumped off the 200 SMA down here, bounced up a little bit, come down, come back up. But basically we can see from the movement it's made a nice little top level here, so it's pretty much bounced off exactly the same point that it did before, almost to the T. So we've got this nice top. Now coming out of Asia, it kind of comes back down again. But basically what we're looking at is the fact that anyone who's gone short here, especially I'd say in this Asian session, so you probably get a lot of people seeing that there's a top being made here in the New York session. Then once it's made the same top in the Asian session, they've put a short order. Now, most traders are taught when you put a short order to put your stop loss above the significant high. Now, the only other significant high, if we look back, is this New York session, which is at the same, pretty much the same price. So above this area is going to be a lot of stop losses sitting around here. So let's have a look. So let's say it goes up to even just past 10 pips. So that's a pretty average. That's actually quite a small stop loss. Most people are looking 10, 20 pip stop losses. So this area is obviously going to have a lot of orders sitting there. Now, why is there a lot of orders sitting there? Because if someone's gone short, the opposite to going short is going long. So there's going to be a lot of buy orders sitting in here because they've sold. So there's going to be a lot of buy orders. Now, a lot of the time, these stop runs and these big pushes out of the stop runs, you see how the price has been pushed up really high here, really dramatically, and then pushed down once again. Now, this is coming out of Asia. There's nothing happening. There's no economic news, nothing really special happening, but the price spikes up. Now, why would the price do that? One theory is this is the banks or anyone with big money, any sort of institution or anything like that. Now, what they would be trying to do is if they're trying to sell, and they've got huge volumes to sell, so they're trying to sell. Now, they can't sell down here or down here. Why can't they do that? Because they've got massive volumes to sell, and there's just not enough supply of sell orders. Hello everybody, this is Stephen from ForexTradingSchools.com. Now today I'm just going to run through a quick video just outlining a trading strategy that we like to use when we trade. And this is pretty much what our whole website is all about. Now what our strategy is based on is pretty much the same sort of principle as stop hunting. We just go and look for areas where there'll be a lot of stop losses sitting. There is another part to the strategy, but that's basically the areas we're looking to trade, is those sort of areas. Now I have the pound US dollar chart open here. This is the 15-minute chart, which I like to trade on. I sometimes look at the hourly just to look at the trend perhaps, but generally I trade on the 15-minute. I don't go higher than that because I'm a day trader. I look at taking profit that day. So I generally don't go any higher. I definitely don't go any lower. It's just too volatile and too unpredictable. So on my chart here, you'll see there's the colored areas here. So the blue area is the New York session, the purple area is the Asian session, and the white in between here is pretty much the Euro session. There's a bit of a Euro New York session crossover here as well. So yeah, basically what we look for when we trade is these areas like this. So we had a nice top form here during the New York session. Price kind of came back down again, and up here, back up here to that top. Now there would have been a lot of people here going, great opportunity to sell, go short, and they would have done that. They would have jumped in here. Perhaps they would have waited till it retraced a little bit. Either way, there would have been a lot of people going short here. And what most traders are taught is to put your stop losses above the last significant high. Now, in this situation, the last significant high is pretty much at the same level, so close to where they would have entered, so there'd be a lot of stop losses up here. Now, if somebody had have gone short here, their stop loss would obviously be a long or a buy order. So there'd be a lot of buy orders sitting up here. So let's say there's someone with a lot of money, someone like an institution or a bank that have a lot of money, and they like to move a lot of money in the Forex market. And let's say they want to sell. Now they can't enter here or anywhere around here because there's just not the volume to sell here. Because to sell you need people to buy, so you need that supply of buy orders in order to sell. And they just don't have the volume here that they need. So what do? Well, we see the price move down, and then all of a sudden, for no reason, we see here at the beginning of the Euro session, for no reason whatsoever, there's no news, nothing happening, nothing special, the price shoots up. Now, I'm sure a lot of people have been sitting there watching the charts and seeing price shoot in one direction or the other for no particular reason. What's happening here is, like I said, the banks are, well, in this situation, the banks are looking to sell. Now, to sell, they have a lot of volume to sell, so they need a lot of buy orders to fill their sell orders. And where will we find a lot of buy orders in this situation? Up here, up the top here, sitting up here above where people will have their stop losses. So anyone who's gone short, maybe even here, or especially here, they're going to have their stop losses up here, which are now buy orders because they sold. So what the banks do is they invest money, a lot of money, and they push the price up. And they push the price up until it comes up here, and we see this nice pin bar. And what that does is it takes out all of the stop losses. So they now filled their demand for buy orders because they're trying to sell. So they want to sell, so they need people looking to buy. So they've fulfilled that by taking out all these stop losses up here, which are buy orders, and price shoots down. Now, price did stumble on the way. The reason is because you still get people that might hang on a little bit longer, but eventually most people will start closing their orders. So any short orders here, to close them, they will become buy orders, and we get the sell orders being filled. So as you can see here, there was a spike here, and there was a jump down. So there was a bunch of sell orders filled here. People's stop losses being taken out. And there was a little bit of a pause, so those orders were still waiting to be filled. There was probably a couple of people hanging on to their orders, and then we see another spike, and boom, price crashes. So this is where basically everyone's given up, close their orders, whatever. Some people, you may have even got people jumping in here, so that would have helped it as well, and price crashes down. Then, if we look down here, once again, we have a huge pin bar. So what's this pin bar doing? Well, look over here, we've got people who have gone long, so they've bought, and down here would be sell orders for their stop losses. So the price has jumped down from here. Once again, big pin bar has taken out all of those stop losses, and that's then pushed the price back up to the upside. Now, this is not perfect because it's a bit choppy around here, but still, doesn't matter any time or how choppy it is, it's still basically trying to get the same result. It's people with a lot of money, and they need to fill their orders. So to fill their orders, they need to, what we say, so this Asian session, what would be called accumulation. So people are going short here, they're accumulating orders, the banks are accumulating orders, or people with big money, they're accumulating their stop losses up here, so the buy orders have been accumulated up here, which is perfect because they want to sell, so they're waiting for those buy orders to accumulate. Once they're happy that they have, and I'm not saying they can see the buy orders how many buy orders are up here. What I'm saying is they can see just by the volume of the charts and the movements on the charts, they can see that there's people that have gone short here, therefore there'd be a lot of buy orders or stop losses up here. So then what they do is they manipulate the market, so they enter with a bit of money, pushes the market up. A lot of time people will see this and think, great buying opportunity, great opportunity to go long, it's going up, I'll jump on this. And they jump in and the price goes up. Once the price goes up, takes out all these people's stop losses, price starts shooting down. This could also be anyone who's jumped in to ride this wave up. Once price is coming down, they're starting to freak out now because the price is going against them, so they start closing their orders and price keeps shooting down. So that's pretty much the strategy we look at, and it happens all the time. It doesn't necessarily happen, I'm not saying it happens during the Euro session, but this is what you should look at. If you see a nice top or bottom forming like this, or even down here, got nice top and bottom levels. So if I draw a line down here, there's a nice bottom there, and this is what we want to look at. We want to look for price to shoot up past those prices because we know there's going to be orders sitting up here, and then price will come back down. This day was lucky. If you were sitting at the chart, you actually had 2 opportunities to trade, and overall discounting, of course, the spread. You know, this is actually a small day, but still there's about 30-40 pips there to collect. And that's pretty much our trading strategy in a nutshell. If you want to learn more about our trading strategy, there's some more detailed videos in our members area. There's also some advanced trading tools in our members area too. We can also, in the members area, you can see how we confirm entries as well, because confirming entries is another very important part to trading. This, you can't just trade just because it spikes. You do have to have a look at. There are times where it will spike, should come back down a little bit and keep heading up. But yes, in our members area, we talk a lot about the confirming entry and go through that. But today, that's all I'm going to talk about. I hope you enjoyed the video. Visit the website, like us on Facebook. The website is www.ForexTradingSchools.com, and the website page is Forex Academy. Thank you and have a nice day.